sector funds are interesting. They should be part of client portfolios, but we generally live with bit of a fear when it comes to sector fund and choice of funds within the sectoral funds. We seem to be, as investment advisors or clients, very comfortable allocating money to diversified equity funds. We respect that view. It is probably a simpler way to look at equity investing for a large majority of clients. Having said that, I'm sure I'm talking to a set of advisors and distributors and not to clients at large. As an advisor, as a client, I can have different sets of choices. So we are telling our advisors, our partners, that it is important for us to understand different opportunities at different points in time, just like a doctor would not prescribe the same medicine for all the clients or all patients. It is important as an advisor and as a distributor for us to know where is the risk reward the best and create portfolios and ensure that you can sort of optimize returns as far as clients are concerned. I'm genuinely not using the word maximizing, but I'm saying optimizing returns. So when you use the word optimize instead of maximize, there is a big difference when it comes to investing between these two. Risk and reward is considered, and then you are promoting an idea or a product rather than just saying that this will give you very high returns. That is not the objective of any good advisor. That is not the intent of any good manufacturer who wishes to have his advisors and clients do well over a period of time. So let me just start with a small example of very recent data. Shreya, is my screen visible?
Not yet.
Not yet?
Mm-hmm.
Okay, 1 second. Yeah, I think it should be visible now.
Yes, it's visible now.
Yeah, so what I'm showing here is a small chart which is prepared as on yesterday. So this is basically, it covers the entire, indices, sectoral indices that are there and the broad market that we are tracking. Sensex, Nifty 50, mid cap and the small cap index, and all these sectoral indices. So all these sectors, that is auto, banking, energy, FMCG, IT, or pharma, all of them have a sectoral index. Nifty has their S&P Sensex also. Both BSE and NSE have these representative indices. Now, if you take a 1 year period here, and I'm not selling or explaining a concept only using 1 year, but the point is to highlight how do you look at different sectors at different points of time. There are certain filters we at DSP very strongly believe can help you take a decision on the entry and the exit level when you are suggesting sectoral ideas to your clients. So I'm going to explain that first and then move on to the sector and a little more in depth about the particular idea. Last 1 year, as on yesterday, which is 28th of November, the Nifty and the Sensex, BSE 30 and Nifty 50 has given a return which is in the range of 6 to 7%. In the same period, when you look at it, the mid cap and the small cap indices have delivered return upwards of 30%, and small cap has delivered a return close to 40%. We have been seeing a lot of reports, talk of the town, everything about mid and small cap funds. There are fund managers and people who are also saying that they have gone through the roof in terms of valuation, and one has to sort of extend some caution when you are allocating to these ideas. But why is there such a stark difference in the performance between mid cap and small cap on one end, and you can largely say the large cap universe? Sensex and Nifty 50 largely represents the top 30 and the top 50 companies of the country, and they are usually large and mega caps. Now, when I look for an explanation for that, one of the strongest explanation will come if you see the graph from this part, which is the sectoral indices. We all know the largest representation in Nifty as a sectoral index is banking. The banking sector, the BFSI sector, has delivered a return of about 2% in the period that mid and small cap index has delivered close to 30-35%. So if 40% of my universe of the 100 that I'm investing in Nifty, the sectoral, the composition of Nifty, if you consider it to be 100 rupees, Nearly 38 to 35 rupees comes from the BFSI sector. That sector has delivered hardly 2 to 3% return. IT sector, which is the second highest weight as far as the Nifty index is concerned, has delivered again only close to 6% return. So something close to 35% on the banking side and about another 10-15% on the IT side, which is somewhere close to 45%, has undergone severe underperformance in the last 1 year. So if you are allocating 100 rupees and if 45 to 50 rupees is not delivering smart returns, naturally the overall return of that portfolio, which is in this case Nifty or Sensex, will get pulled down. On the contrary, in terms of Nifty, mid cap or if the small cap index, if you consider, the weights are relatively lower and they are far more diversified. The mid cap index has about 150 stocks and the small cap index has about 250 stocks. And they are represented from more diverse segments as far as the markets are concerned. And that has led to fairly strong performance in those two indices. And as a fallout of that, the funds that follow these two styles, that is small cap and mid cap funds, they have also generated fairly strong returns. Now, why was I interested in starting my session with this chart or with this slide? The importance is to explain that the sector has been an underperformer. It has been a laggard. What sectors have done well? Auto has done quite well. And I will show you one more chart before I move into BFSI as far as this is concerned. FMCG and infra have been doing quite well since, in fact, the COVID 2021. From that time onwards, investment economy, infra, theme, manufacturing, etc. have been doing well. Pharma was a laggard, but that has also caught very well. Metal delivered very good returns till about a year back. Reality sector has also been doing quite well. So largely the two sectors that have done really bad and been an underperformer has been banking and IT. And we believe that banking has a lot of reasons for it to sort of come back into limelight and recover the lost ground in the next couple of years. And the reasons I will start sharing in a minute. Let me also shift my screen to something which is another important aspect. Just give me a second. Freya, you'll have to just tell me if
Yes.
my screen is visible once I start sharing.
Yes.
It's visible now?
Yes.
Yeah, okay. One moment. Just wanted to share. So let me move on to the banking and financial services sector and the reasons why we are bullish on banking and financial services sector. This sector is something that has been in existence for many, many years. In fact, it would be one of the sectors that has been the oldest sector that is known to mankind. There are records of the sector having been in existence for more than 3,700 years. When you look at some of the Greek, studies, even in India, when you look at Arthashastra by Kautilya from the Maurya period, there are references of banking as a sector. 3,700 years actually means almost 2000 years before Christ also. We are today in 2023, that is 2000 years after Christ. 3,700 years is almost 1700 years before Christ. There is known records. It is available. The records are available of a banking kind of a transaction where money is given, interest is paid, and money is taken, which is primarily what banking is all about. Even in India, we have records of as old as 2,200 years that banking as an industry existed. So in other words, it is one sector which technology can come and go. Maybe you will have systems where you may not use the current methods of transportation. That can undergo through changes. Like we all used to use pen and paper writing. We today hardly use pen and paper except when there is an official document in the banking system. When you have to sign a check or something like that, you don't use largely pen and paper. We used to do, calculations on calculators and on multiplication on books and paper. Today we use Excel for doing that. So a lot of these things that have happened in the last 20, 30 years have completely undergone a change, while banking, financial services, exchange of money medium is something that has remained, and as long as mankind is there, I think the need for you to buy something from me, for me to buy something from you, or the mode of transaction, which is money, will continue to exist, for which there will be always a borrower and there will be a lender. Now, this idea today, what we talk about banking and financial services, which is why this word is equally important. Banking is all about giving and taking money, but financial services is about what we are all doing. All of us are in financial services. None of us are lending money. I was, when I'm seeing that AssetPlus is one organization where you do mutual funds and insurance together under one platform. Now, both of them are not lending, but they are services business. Through insurance, you hedge the risk of a client, whether it is health insurance or life insurance. You give them a commitment. If something goes wrong, you are rewarded by the insurance policy. In mutual funds, PMS, all of that is wealth creation. So one is protection and one is wealth generation. Now, none of them, we need a huge capital. Is there a lending mechanism? Is there a CIBIL score? None of that works. So financial services is all about that. Banking is the age-old traditional giving and taking money. Both of them today coexist under one umbrella. When we say, so the first definition, what I want, before I start getting into the details of the idea, I just want to talk about two more things, which is how do you decide whether it is a right time to consider a sectoral idea? There are multiple sectors. As you just saw in the graph I showed before coming to the presentation, there is auto, there is cement, there is metal, there is IT, there is banking, healthcare. There are some almost 20, 25 sectors that are tracked, and that many companies exist, which are part of many of the mutual fund portfolios. How do you know whether it is the right time to buy an auto sector? Or is it the right time to buy banking sector? Or should I go for IT sector today? There are three conditions that one has to fulfill. If all the three conditions are fulfilled, I think with reasonable confidence, we should be able to buy a sectoral idea or a particular sectoral idea. What are the three conditions? The most important sectoral condition, the condition that you should have is the sector should have, I'm repeating, underperformed for a reasonable period of time. I am not saying the sector should have performed. I am saying the sector should have underperformed. What do you define by underperformance? 3 years of underperformance, 4 years of underperformance. I just showed you 1 year of underperformance of banking sector. But actually, the BFSI sector has underperformed for nearly 3.5 to 4 years. 2019 December or early January 2020, before COVID happened, the banking and financial services sort of peaked out. After that, many other sectors have delivered returns, and banking and financial services sector has not delivered return. Why do I say that? I'll give you a very small example. Nifty returns in 2020, pre-COVID, to now is close to 17-18% CAGR. And the banking and financial services index, there is a Nifty financial services index that is only up about 10%. So a index is up 18%, in which there is 40% weight of the banking and financial sector. And the sector which has got 40% weight in the index is only up 10%. That means that Nifty is up because the rest of the 60 rupees, the remaining sectors have delivered such high returns, because of which the overall return is around 18%, and the banking financial sector has been a drag. It has pulled down. If that had delivered, probably Nifty returns could have been even better. So hence, I'm saying the sector is underperforming is the first criteria. So the first tick mark is, has the sector underperformed? Yes, the sector has underperformed. 2, it should be a broad-based sector. It should not be a narrow sector. What do I mean by a broad and a narrow sector? A broad sector is one in which there are multiple segments of businesses. It is not one particular business. For example, if you take auto sector, auto is a very narrow sector. Why do you say that? There are two-wheeler companies, four-wheeler companies, and some auto ancillary companies. And these auto ancillary companies will always supply to the auto manufacturers. This is all the auto universe is all about. When it comes to banking and financial services, you can see there are two components. There is this component which is B, and then there is this component FSI. Banks and NBFCs, non-banking financial companies and banks, they are primarily what you call as lenders. They give money, they take money, they lend for home loans, businesses, personal loans, white goods, two-wheeler, car loans, mortgages, everything they do, credit cards, all of that. So they are a lending machine. Insurance, completely different business. India is underpenetrated in insurance. Within insurance, there are some 7 or 8 segments or more: health, fire, house, life insurance, motor insurance, plant and machinery insurance. There are multiple types of insurance that are available. And different companies, general and life is a very big segment. Capital market, mutual funds is a capital market product. Broking, demat accounts, buying stocks, that is a exchanges, that is a capital market led product. Then fintech and UPI, debit card, credit card, that is completely different. Whether mutual fund AUM goes up or not, credit card usage is very different. UPI, fintechs, they work very differently. Whether we do well and AssetPlus sells more AUM in mutual funds or not, most of you can sell insurance irrespective of that. So all of them are disjointed, or they have no connection with each other. The need to buy an insurance. During COVID, people wanted to buy more of insurance. Maybe people wanted to buy less of mutual funds at that point of time. Or their spending on credit cards would have reduced because we were not going out, we were not traveling, etc. But everybody understood the importance of health insurance once COVID had happened. So the business volume there increases. Today, there is travel coming back. People are traveling, people are buying. So there is more car loans, home loans, people are redoing their homes now. So that lending business is improving. Maybe I'm looking at, refurbishing my house, buying better white goods, electronics, etc. So there is a personal loan or a gadget loan that I will take. So each of these businesses are diversified and they work with different metrics. So it's a very, very broad-based sector. The other sector I can tell you, which is broad-based, is similar to healthcare. Hospitals are there, diagnostic sectors are there, diagnostic businesses are there, pharma companies are there, equipment manufacturers are there. That is the machines that you use in surgery. There are companies that manufacture them. They are all very, very disconnected. So when you look at a sector, the sector should have underperformed for a long period of time, which is 3 to 4 years. It's very good for you to enter that sector. 2, the sector should be very broad-based. And the third one, which is very important equally, is that if a sector has underperformed, there would be some reasons that the sector would have underperformed. You have to now see the fundamentals of the sector is improving. Are you seeing signs that the sector is improving? Now, when it comes to banking and financial services sector, are we seeing that, okay, 2 year, 3 year, 4 year, the sector has underperformed? That data is available. It is a broad-based sector. It is there in front of you. You can see 10 different types of businesses which are clubbed under the umbrella of banking and financial services. It's like a huge umbrella under which many businesses are put together. It is not that small for kids umbrella which only a small child can use in the rain. This is a very big umbrella under which many people can. It's like a canopy. If there's a huge rain happening and you see a big canopy, you will go and stand under, and it can accommodate many people. So banking and financial services is one such canopy system where there are many businesses and all are disconnected. The third one is the fundamentals of the sector. And one way to look at the fundamentals of the sector is you can see how the growth rate of the sector has been. And I will add a few more points as far as the sector is concerned. Now, what has been the beauty of BFSI as a sector? I said last 4 years, the sector has not delivered returns. It is a growth engine of the economy usually. In the last 20 years, from 2004 January till, if you take till September 2023, this sector has delivered better returns than Nifty. It has given a return which is 17.6%, the banking and financial services index, in spite of being one of the worst sectors in terms of problems. The biggest crisis we have ever seen was global financial crisis. The word itself is GFC, global financial crisis. When everything, banks in the US, which were in existence for 100 years, Lehman Brothers, which was in existence for 150 years, Bay Streams, everything which was there for 100 plus years. These are organizations that survived for 100 years. They also vanished. We saw in India many cooperative bank crises. We saw ILNFS crisis. We saw demonetization. We saw the NPA crisis as far as banks are concerned about 6-7 years back. Again, this year, we have seen some banks in the US collapsing, First Citizen Bank, etc., etc. So we have seen bank collapse. We have seen economies collapsing. We have seen high inflation rates. We have seen, NPAs in the banking system. After all of this has happened, this sector has delivered a return which is 17%, and in the same period, Nifty return is about 13 to 13.5 period. So 13.5%. So whichever way you look at it, whether you look at it from a long term or even a short term period, short term is like 5 years, 7 years, etc., and long term is about 20 years. The banking and financial sector, with all the problems that a sector like that can have, it is delivered returns. First of all, it is often, even I am doing that mistake saying that sector. It is actually not a sector. It is a thematic idea. A theme has got multiple businesses. Sector is what? Bank is a sector. NBFC is a different sector. Insurance is one sector. Asset management business is one sector. Exchanges is one sector. Because in a sector, the performance or the correlation will be little closer. But when it is a theme, there are multiple types of sectors all correlated with one business, which is business of money. Either, like I said, wealth creation, protection, credit card, all of that. It's all to do with money. So it comes under the umbrella of theme. This thematic idea has consistently delivered returns. It has a lot of times, you can rarely say that you will get returns in this sector more than, or this thematic ideas more than 12%. But over a long period of time, when you look at 7-year period of time, 7-year rolling returns, 91% of the time, a banking and financial services sector has delivered returns which is more than 12%. On the same note, Nifty has only delivered 12% plus returns 52% of the time. So if Nifty has delivered returns, the reason is because banking and financial services is 30-35% in the Nifty, and that has helped Nifty generate that extra return. So someone who is not convinced about banking and financial services, I would say, then should not be believer in Nifty either, because even today in Nifty, the weight of this index is more than, this segment is more than 35%. So how can we believe something which will do well when the segment itself is the largest weight in the Nifty sector? I'm just coming to the next point I made, which is important. And this is a very interesting point. The profit pool that this segment, the BFSI segment, generates is 4 lakh crores. 4 lakh crores is the profit pool that this generates in the year. It is in one financial year I'm talking. In the financial year FY23, that is April 22 to March 23, approximately 4 lakh crore profit is what this sector has generated. And it is one of the highest that will come in the next few slides. We will show that. Banks generate about 2.5 lakh crore of profit. About 1.2 lakh crore of profit is generated by NBFCs. Life insurance business generates about 50,000. Non-life does not make too much of profit. Asset management companies, exchanges, and depositories, all of them generate. And if you see the growth in profits, bank profits have grown by 11%, NBFCs have grown by 13%. So these are the two lending side of the business. Lending is where we saw a lot of stress has happened. Whenever there is a crisis, it is the lenders who get impacted, because you have given money, and if you don't get the money back, then that becomes an NPA, and that becomes a big drag on your profit. But if you look at the profit of life insurance, it is growing at a rate 24% in the last 10 years. Asset management companies, thanks to you and me, the profit pool is growing at 22%. Exchanges, the profit is growing at 21%. Depositories, if demat accounts are opened, there are more people interested in the market participants. They make money through IPOs, lot of things. 21%. Anything which is growing at a rate of 15%, which is double the rate at which India's GDP is growing, itself is considered to be healthy. Some of these segments in the BFSI sector are growing at a rate which is 3 times the growth rate of the GDP of the economy. So that is the power of the segment asset. And we still know, we have been seeing WhatsApps where there are only 3.5 to 4 crore folios, there are only 6 crore insurance, there are 10 crore demat accounts. All of this is so less compared to the potential that India as an economy has. So there is much more to happen as far as this segment is concerned in periods to come. And this is something that you will see here. Total credit, credit to households, we are at 37%. Developed economies and are at 74-62%. Life insurance premium, which all of you are very, very interested in, it is at 3% to the GDP. Okay. Now you have to remember some of these economies have social security. So it's a very different thing, but we don't have that. Hence, we need insurance in various formats. Non-life insurance premium as a percentage of GDP, it is 1%. In US, where health is a big issue, it is 9%. Mutual fund assets as percent of GDP, just look at the numbers. Germany 75%, US 140%. They are bigger than the banking segment. Even UK, it is 78%. In India, it is 16%. Credit card ownership, everybody lives on a credit card. We are still at 5% of the adult population. Credit card spending, it is only 6. We may be getting all news. UPI transactions have gone up, this, that, etc. Credit card usage has gone up, but it is still only 6% of my usage pattern, whereas the average for the many other developed economies is 20 to 30%. So like I said, as India grows, as the population becomes young, younger population starts earning, as more awareness is created by you and me on different aspects, then each of these aspects will continue to go, and hence it is a structural story and it is not a small idea for the shorter period of time. So that is one more, that is the fourth point. Whenever at DSP we suggest a sectoral or a thematic idea, we also take one more point in consideration. It should have a longer runway. It should not have a short runway. So these 3 points are very, very important. Why today? It is underperformed and it has to be underperforming. Only then we will launch an idea. It should be at reasonable valuations. These two go hand in hand, because if it is underperformed, the valuations will be attractive and fundamentals should be turning around. Fundamentals are turning. The bank balance sheets are stronger. NPAs are at its all-time low. And all the other aspects, be it asset management, be it insurance, be it credit card, all of them are only slowly starting to pick up. And the last point is, as I said, it should be broad-based sector, which I have established through the different businesses that it has. And you should not be worried that will I make my money in 6 months and should I have to tell my client that you should exit. It is not such a segment. You can definitely invest for a couple of years, and that is what is expected from a thematic idea. So only such thematic ideas we recommend. Now comes to this question that you may all wonder, and we often get this question: why should I invest in this fund or in an idea like this when BFSI is such a big percentage of Nifty? Am I not buying this sector already by investing in diversified equity funds, multi-cap, flexi-cap, large and mid-cap? Aren't these funds allowing me to participate? Yes, you're right, but you are not fully correct. And I will say why you are not fully correct. So this is actually the universe, if you see, is what a mutual fund investments normally does. They will invest in the top 500 companies of the country. Beyond that, typically mutual funds at least do not invest, because then the market capitalization, the liquidity, etc. will be very, very difficult. Now, if you look at the top 100 companies, which is the large cap universe, the profit pool. So you have to understand the profit pool of the BFSI sector in the top 100 companies. If the top 100 companies in India generate a profit of 100 rupees, 39 rupees comes from the banking and financial services companies, which are there in the top 100. So it could be some NBFCs, many banks will be there, etc., etc. But what is the weight of market capitalization? If I'm giving 100 rupee to Nifty or to top 100 companies, the NSE 100, if I take that market market capitalization, only my 28 rupees goes. But where is the profit of that 100 companies? In that, there is a 39% weight. So the logic in investing is that if the profit pool is large, my weight should be large in those companies. There is a gap of almost 11%. Take the next set of 150 companies, which is called as the mid-cap companies. 38% is the profit pool. If of the 100 rupees profit, these 150 companies generate, 38 rupees comes from BFSI sector, but the weight is only 21%. So the gap is even larger than in large cap. Now comes the small cap. You may think there are no small cap BFSI. No, it is wrong. There are BFSI companies in the small cap universe, and there too they generate a 28% profit, and the profit pool is only market capitalization is only 16 rupees. So whichever composition you take, the profit pool is higher than the weight that you are giving that company. It is like saying, if you have clients who are the large clients, naturally when you serve them, your attention will be given to larger clients. And why do we do that? We do that because you and I understand that it is that client who is helping me earn my revenue, who is bringing new business to me. And that is not true for your and my business. It is true for any business. A hotel will treat their large clients. I mean, if DSP as a company is booking 100 rooms every month in some hotel, for them, we are a big important client. Naturally, they will give us a lot of attention, lot of service. Our queries will be answered very quickly, etc. When you and I buy credit cards, we have a tag, like somebody will say, oh, you're a platinum card, you're an Infinia card, you're a gold customer. Naturally, you get extra attention. Why do we do that? Because of the spend or the revenue we generate, you get more attention. Similarly, by that logic, if a group of companies is creating higher profit in the set of companies, then logic tells me they should have higher market capitalization. But the market doesn't behave in that manner. Hence, when there is a lower representation in market capitalization, you tend to say they are undervalued, and that is when you start allocating capital, your capital, to such ideas. So this gap that is there is a very strong reason for us to believe that the sector is underrepresented or undervalued, and hence I would like to participate. And the combination of this, in the top 500 companies of India, 38% of the profit comes from BFSI, but the weight in top 500 is only 26%. There is a 12% undervaluation or underrepresentation. And if you remove BFSI from the profit pool, then the profit pool of top 500 companies falls to 10%. So who is actually lifting the profit mechanism of the whole 500 companies? It is BFSI. But last 3-4 years, that sector has not delivered returns, and hence a very strong belief that you can see a turnaround over a longer period of time, and hence we should invest. The last point I want to sort of, say before I hand over to Shreya is, the underperformance in the last 4 years is something that you have never seen. And why do I say that? When you look at the financial services index, this white line is actually the Nifty line, and the blue line is the financial services index. As I mentioned in the beginning, from around 2019, end of 2019 to now, the sector has underperformed Nifty in a big manner. So both the indices are balanced to 1,000 points. And if you see, last 4 years, just before COVID hit us in March 20 and markets corrected, but you can take this data from 2019. So we are almost talking about 4-year data point, 2019 September to 2023 September. In this 4-year period, the Nifty index is up 79% and the financial services index is up 56%. So that difference of about 23%, if you annualize it, you will get somewhere close to 4 to 4.5% of underperformance. This underperformance has never happened except once. The only period it has happened, that is the underperformance with Nifty, the financial services sector index, and Nifty has underperformed. Financial services sector has underperformed Nifty only once in this manner, which is highlighted in this dotted line. During the global financial crisis, and now there are times where the gap between the two returns have been almost zero. So all those points we have said, and we are calling those points good to invest. But we are saying when it is negative and the underperformance is so severe, it is a good time to invest. And once we saw that in 2008 during global financial crisis, naturally, because it was a financial crisis, and you would have seen that opportunity, an equally compelling opportunity you're seeing now in the financial services sector underperformance, and hence it is a great time to sort of invest. Valuations I established, and this is the last point, which is about the good, positive of the bank's balance sheet, which is the bank balance sheet has actually come back with very low NPA, which could be sustainable for improving the credit profile of the banking sector as well. So just to summarize, and beyond banks, there are many more opportunities that are there, which also we said: insurance, capital markets, fintechs, credit cards, so on and so forth. So to summarize, actually, it's a very, very simple idea from that perspective, provided you understand why should you look at any thematic idea. The reason to look at a thematic idea should be underperformance, strong and open sector in terms of, how diversified the sector is. It should be seeing fundamental signs of improvement as far as the sector is concerned, and the valuation should be reasonably attractive. All these 4 points are fitting perfectly well as far as the BFSI sector is concerned, and hence we think it is a great time to consider this in client portfolios.